So you're hunting for a strategy, maybe a way to approach Bitcoin trading, perhaps grab some, consistent profits.
Uh-huh.
Okay, well, let's dive right into one. Today, we're really breaking down a specific crypto scalping strategy for Bitcoin.
Right.
And this comes from a source you actually shared with us, a video from the Holdy with Prayank YouTube channel.
Yeah, I remember that one. It was about using the RSI, wasn't it?
Exactly,
Yeah.
using the Relative Strength Index, the RSI, for scalping Bitcoin. And they demonstrate it on the Delta Exchange India platform.
Okay.
So our mission here really isn't to endorse it or shoot it down, but just to understand how it works. What are the mechanics as laid out in that video?
Yeah, precisely. It's like taking apart the engine, seeing how the pieces fit. This video presents a method, and we want to see what makes it tick.
Okay, so before the actual tactics, the video does spend a bit of time introducing the platform they use for the demo Delta Exchange India.
Sure.
They mention it's FIU certified in India, offering crypto futures and options. What were the key points about the platform itself that are relevant here?
Well, the FIU certification is definitely a starting point, suggesting some regulatory oversight within India, which matters to users there.
Sure.
And the fact it offers futures and options is significant. Scalping often involves leverage, which you get with futures. Options add another layer.
And the 247 market aspect.
No, absolutely crucial for Bitcoin. The market never sleeps, so a platform that's always open lets you apply a strategy like this anytime a setup appears.
Makes sense. And the video also hinted at potentially better tax treatment compared to spot trading. That always gets people's attention.
It does, yeah. Though obviously that's complex and location specific. But for Indian users, the INR deposits and withdrawals are also a clear practical benefit mentioned.
Okay, let's get to the heart of it then, the RSI strategy itself. For anyone maybe less familiar, how does the video set this up?
Sure, so the foundation is a 5-minute Bitcoin chart. Very short time frame, typical for scalping, aiming for those small, quick moves.
Right.
Then they add the relative strength index indicator. But here's where it gets interesting. They adjust the standard levels.
Ah, okay. Not the usual 70-30.
Nope. The video suggests using 75 for the overbought level and 25 for oversold, specifically for Bitcoin.
Wider bands. Why do they suggest that? What's the rationale?
The argument presented is basically crypto volatility. Bitcoin especially can have sharp moves. So widening those RSI bands to 75 and 25, the idea is you're filtering out maybe smaller fluctuations and only focusing on more significant extremes, trying to find higher probability reversal points.
Okay, trying to reduce the noise, essentially.
Exactly.
Yeah.
And they also mention, sort of as an aside, customizing the chart, white background, dark text, just for visual clarity, personal preference, really.
Got it.
Yeah.
So clear signals are key. Now, the video then lays out a specific 3-step process for actually entering a trade using this setup. What's step 1?
Step 1 is what we just discussed. Wait for the RSI to actually enter those adjusted zones. So above 75 for potential shorts or below 25 for potential longs.
Okay, wait for the extreme reading. What's step 2?
Step 2 is looking for divergence. This is a big one.
Right, divergence. Explain that again quickly.
So you're looking for a mismatch between what the price is doing and what the RSI is doing. For a long trade, you might see the price make a lower low, but the RSI makes a higher low. That's bullish divergence. It suggests the downward momentum might be fading even if the price just dipped lower.
And the opposite for short.
Exactly. Price makes a higher high, but the RSI makes a lower high. That's bearish divergence, potentially weakening upward momentum.
And the video showed a live example of this, right? Bullish divergence where price went lower, but RSI stayed higher.
Yes, they did. And seeing it happen on a live chart really helps illustrate the concept. It's like the indicator is giving you an early warning that the current price trend might be running out of steam.
Okay, so RSI in the zone, check. Divergence spotted, check. What's the third and final piece needed to pull the trigger, according to the video?
The third condition is what they call a market structure shift, basically confirmation.
Confirmation how?
After you see the divergence, you wait for the price to actually break a key level. So after bullish divergence, you wait for price to break above a recent significant high.
Okay.
After bearish divergence, you wait for price to break below a recent significant low. This break is the signal that the reversal suggested by the divergence might actually be happening.
So it's not just the RSI and divergence. You need the price action itself to confirm with a breakout.
Precisely. The video, again, used its live example, marked a high after the bullish divergence, and entered the trade only when price broke above that high.
Right. Makes sense. Wait for that confirmation. So, okay, you're in the trade. How does the video suggest managing it? Targets, stop losses.
It's pretty systematic. First target is set at a 1-to-1 risk-reward ratio, meaning the potential profit for that first target is the same amount as you're risking if your stop loss gets hit. Pretty standard practice.
Okay.
The second target is set at the previous significant high, if you're in a long trade, or the previous significant low for a short trade.
And what do you do when you hit those targets?
The suggestion is to book half your position, take half the profits at that first 1.1 target.
Secure some gains.
Exactly. And then let the other half run towards that second target, the previous higher low, to potentially capture a bigger move.
And the stop loss, where does that go?
Crucially, the stop loss for a long trade is placed below the low point of the whole setup pattern. That's your safety net if the trade goes against you.
Got it. Protect capital, aim for structured gains. The video showed live examples too, right? Some worked, some didn't.
Yeah, the examples were really useful. There was a clear long trade setup, oversold RSI, bullish divergence, break of the high that hit both targets. Looked pretty clean, but there was also a great example of a trade they didn't take. It looked like divergence might be forming, but it wasn't clean. The lower high on the price side didn't quite confirm alongside the RSI's lower highs.
So sticking to the rules avoided a potentially bad trade.
Exactly. It highlighted the importance of discipline. They also showed a successful short trade example following the bearish divergence and low break rules. Importantly, they also showed an example where the stop loss was hit, a losing trade.
Which has to happen sometimes.
Absolutely. It's a necessary reminder that no strategy is perfect. Losses are part of trading. Managing them is key.
For sure. Okay, shifting slightly, the video brought up some practical points too, especially about the Delta Exchange India platform. What were those?
Yeah, a few key things. First, the daily options expiration time on Delta Exchange India, 5:30 p.m. IST. Critical info if you're trading options there.
Definitely.
Second, a really strong warning about fake crypto websites. Scams are everywhere.
Ugh. Tell me about it.
The YouTubers strongly recommended using their referral link for the initial visit, just to be sure you land on the legitimate Delta site, and then immediately bookmarking it. Less about the referral, more about security.
Good advice. Anything else practical?
Yes, a big emphasis on paper trading. Practice the strategy in a simulated environment before risking real money.
Standard, but essential advice.
Get comfortable with it, see how it feels, build confidence without the financial risk. And of course, the standard disclaimer, this is educational content, not financial advice.
Always important. Okay, and lastly, time frame. They focused on the 5-minute chart for scalping, but mentioned Bitcoin's 204/7 nature. What was the point there?
Just that, unlike stocks with fixed sessions, Bitcoin trades continuously. So while this is shown as a 5-minute scalp strategy, if a setup occurs and the conditions hold, you could potentially hold it longer than a typical quick intraday scalp, simply because the market doesn't close. A bit more flexibility, perhaps.
Right, the clock doesn't stop things. Okay, so let's try to wrap this up. The core of this Bitcoin scalping strategy, as shown in the video, wait for RSI on a 5-minute chart to hit 75 overbought or 25 oversold.
Check.
Then look for divergence price and RSI moving in opposite directions at those extremes.
Check.
And finally, wait for confirmation. A break of a key high after bullish divergence or a key low after bearish divergence to enter.
Check. And manage the trade with that 1.1 first target, previous high-low second target, and a defined stop loss.
That pretty much sums up the mechanics they laid out.
It does, yeah. A clear, rule-based approach presented in the video.
And for you listening, remember, this deep dive is based on one source, that specific YouTube video. It's just one perspective on crypto trading.
Absolutely. The trading world is huge, countless methods out there. What's interesting here is the defined rules and the visual example.
Well, like any strategy.
You need to be critical, do your own research, and definitely, as the video stressed, practice. Paper trade at first.
For sure. So if this specific scalping strategy caught your attention, think about the points we discussed. Maybe check out the source video if you like, and consider trying it out in a practice account.
See how it feels for you.
Now, here's a final thought to chew on. The strategy uses specific RSI levels 75 and 25 based on perceived Bitcoin volatility. How might those levels perform in drastically different market conditions?
Yeah. Like, what if Bitcoin enters a long period of really low volatility? Would you still get enough signals?
Or conversely, what if volatility goes absolutely crazy, even more than usual? Do those 75-25 levels still hold up? Or do they start giving too many false signals?
That's a great question. How robust are fixed parameters like that across changing market regimes? Something to definitely ponder as you explore crypto trading further.